I love the voice. All right, cool. So look, ladies and gentlemen, the first thing we're about to start off with, now let me get serious. You know, I was getting hyped to get y'all's attention. Now I'm going to tone it down a little bit so that we can focus, right? Because I'll be having to reel myself in because I'm going to be all the way out there in outer space and I might not be able to get back. You feel me? So first two things we're going to tap into is going to be two of the products, right? The wonderful Harmonic Scanner. Shout out to that boy CT. Okay. So we're about to tap into the Harmonic Scanner and see if there's any setups that we might be able to take advantage of. After that, we're going to tap into the DeLorean. And then after that, I do have two potential setups that we possibly are going to be able to take advantage of in the market tonight. It is a Friday, so we know Fridays are, you know, we don't want to force anything on a Friday. It is the end of the week. So, yeah, let's see. Not going to take me too long to see if there's anything that I might like. And as of right now, it's not looking like there is anything that I like, which is okay. But, you know, we go scan that thing. And I don't see anything. I don't see anything. All right, we don't see anything. DeLorean. Boom, 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 boom. Hit him with the refresh. Hit him with the refresh. Don't know what's going on. Okay, let's see. Okay. Let's try to bring that up one more again. Maybe that ain't working for me. My computer do be tripping sometimes. Don't do this in front of company, bro. Act right. Don't embarrass me right now. Don't embarrass me. If this don't work, that's fine. Yeah, I don't know what's going on. I don't know if it's the software or if it's my laptop. But yeah, it must be the software because this is working. Yeah, I don't know. I'm gonna try it one more time. If not, it's not really that big of a deal. We would just work with what we got. Yeah, I don't know what is going on. I probably have to restart my computer whenever I get off. Cause I don't know why this is not pulling up. The Harmonic Scanner just pulled up. Hold on. Yeah, it must be the software because I mean, shit, this just pulled up. All right, so we're not gonna worry about it. Maybe it's just currently down right now. I don't know. It's not that big of a deal. All right, so let's go ahead and initially go over. So first thing we're gonna go over. One thing I want to be able to talk about is how to be able to properly swing a position. Okay. So one thing I'm gonna be honest with you guys. Let me get you to drop a one in the chat if you have an issue holding a trade past 24 hours. Be honest. Don't lie. If you have any kind of emotional issues with holding a trade past today, let me get you to drop a one in the chat. Don't lie. Because I know it's a lot of y'all that probably see the smallest pullback and you're like, let me just go ahead and exit the position. I've already made my money. And you're like, damn, it kept dropping. Damn, I should have held it, right? So look, peep game, right? This is by definition a great swing trade. So let me break this down to you real quick, okay? The thing I really want y'all to be able to understand is I'm going to walk you through exactly what I do and how I manage all my positions in my Telegram chat, but you gotta trust me, okay? It doesn't do you any good to trust yourself, okay? Because you're gonna miss out on opportunities by trusting yourself. You gotta trust me. If it's my trade, don't trust you, trust me. So example, right? Whenever this trade initially hit entry, TP1 got smizacked, okay? Now it's two kind of people, right? It's the people that's like, oh, okay, I made my money, I'm gonna hop out. Then they got the people that's like, I mean, he does have 1, 2, 3 other take profits. Let me hold it and see if it goes and hits those, right? TP2 gets hit, okay? What does the market do? The market gives like a slight retracement of about 25 pips, ends up dropping again, okay? 60 pips, ends up pulling back again, 50 pips, right? Ends up dropping again, right? 50 pips, ends up pulling back again, right? 60 pips. The reason why I'm pointing all this out, let's peep this, right? It pulled back 26, dropped again for 59, pulled back for 50, dropped again for 45, pulled back again for 58. The reason why I'm bringing this up is because every time you would have been looking at your phone over the course of time, you would have been in profit, then you would have come back. It would have been, it's not like you would have been in drawdown, but the profit would have been less, right? Profit. So pull back, you're like, should I get out? You're like, nah. Then it drops again. You're like, okay, we back in the money. Then it pulls back again. You're like, damn, I should have just got out. Then it drops again. You're like, okay. Then it pulls back again. You're like, man, let me just go ahead and get out. The issue with it is whenever you adjust your stop loss to break even, right, which would have been up here, the goal is to allow the trade to either keep going in your direction or let it hit your break even. If you decide to take it upon yourself to manually exit the position, it literally defeats the whole purpose of even adjusting your stop loss to break even. You might as well just exit whenever it hits take profit. You feel me? Shout out to my boy Wall Street Ray. Trust me, I already know. One of my biggest struggles, two of my biggest struggles in trading was manually exiting positions, specifically in drawdown, right? So another example. I used to be the person to where if you're sitting here looking at the chart, your brain is gonna feel like this is gonna hit your stop loss because your brain is like, man, it's finna just hit my stop loss anyways. Let me just go ahead and exit. Then you would have come back and be like, man, it never hit my stop loss. So manually exiting can go against you on both sides. It can go against you if you exit and drawdown and not allow it to hit your stop loss, or if you exit out of a profitable trade before the trade actually finishes. Reason why I'm saying all that is because you're never gonna maximize any individual position if you're always looking for a reason to manually exit the trade, right? This trade ended up dropping for a total of 16-1. Now I'm gonna be real with you. Yeah, you would have taken partial, so it's not like necessarily you would have just held the original position. That's not the point that I'm making. The point that I'm making is you're leaving money on the table every time you decide, let me just go ahead and exit this position. So what I'm saying is I'm literally updating you guys every time I move my stop loss as far as break even and profit. The reason why I have this orange line here is because this is where my current break even is. So I took partials at TP1, took partials at TP2, took partials at TP3. I have one more take profit. Am I going to exit? No. One or two things is now going to happen. It's either going to pull all the way back and hit this break even, or it's going to keep dropping and hit my final target. That's it. Right? And it sounds simple, but you guys got to allow the trade to do what it's going to do. How many days have we been in this trade? How many days have I been in this trade? Because I'm probably in this trade by my damn self at this point. 2.5 days, almost 3 days, right? Most people do not feel comfortable holding a trade past 24 hours, which is why I asked the initial question, how many of y'all, right, have an emotional issue with holding a trade past a day? So this is going to be a perfect example because if you guys have not noticed, I send out, now I'm going to be honest with you. I actually had the ability to have you guys do the same thing on GBP JPY, but what the hell? Bro, don't tell me what is going on. I'm gonna be tight if my laptop is on some nonsense. Hold on. Okay, cool. Okay. On GBP JPY, let me show y'all something real quick. Because on GBP JPY, actually, I moved my break even up. I was too aggressive, right? So on GBP JPY, I really should have kept my break even up here, but I ended up moving it to take profit one. As you see, it came back and hit take profit one. So this could have been a trade that I still could have been in as well. And as you see, it would have hit another target. So I managed Euro JPY nicely. GBP JPY, honestly, I was being too aggressive with my break even. My brain told me keep it up here, but emotionally I was like, let me just make sure I secure some profit. But that kind of goes against what I'm explaining in the first place. So you can't be afraid of having it hit your break even. That's the whole purpose that is there, right? But this is another example of a swing trade that is still dropping. I'm no longer in it because, as I just explained, I moved my break even up too aggressive, but that's why I was able to explain the beauty of seeing Euro JPY play out. So moving forward, that's one thing that I've been practicing on, where to put my break even so that I can remain in the trade. Because no, in my personal opinion, you don't just want to keep your break even at your original entry in general. Like you want to be able to start looking for reasons to move it up. Last thing you want is to let this come from all the way down here, all the way back up here. You don't want that. That's stupid. So you want to be able to find structure levels, right, that makes sense to be able to move it up to. So notice this entire move, there was nowhere I could have really put my break even. Like, think about it. There's no real structure here for me to have moved my break even. That's why I left my break even here until I saw this. What was this? This was a liquidity sweep. The market came above these relatively equal highs, swept liquidity, hit this imbalance, okay? hit this imbalance, and then it continued dropping. So whenever I saw this aggressive move, I'm like, okay, this will make sense to move my break even to, because if it comes back and hits this, it's valid at that point because the market swept, hit an imbalance, continued dropping, and hit take profit 3. So as I'm telling you guys, right, let me show you. I'm literally telling you guys where to put your break evens. Look, up 190 pips, R&R 1 to 12.5, adjust your SL to 130.090, securing 96 pips. What does that mean? If you put your stop loss here, that is going to secure 96 pips, assuming it comes back and hits your new break even. So either way, you're still gonna make money. So just let your break even get hit, or let the trade keep dropping. Okay. And like I said, I'm a little tight that, like I said, on GBP JPY, because now that I see they both are still dropping, I could have been making more money in this, but it is what it is. You know, no regrets. All you can do is learn from it. So, like I said, think about this example that I just explained, right? It didn't make any sense for me to put my break even at TP1 because there's no structure in this area. So of course it got hit. This was where the structure was. The structure was based off of this candle. So I should have put my break even above this candle. There's no structure level in here. So it made sense that the market is going to take me out. You want to know what I could have did once the market did this? I could have then moved my break even right here, right? And then look, when the market did this, I then could have moved my break even right here above these wicks. So you just keep moving your break even based off of the structure. Don't just randomly put your break even and profit just for whatever reason that you're coming up with. Okay. So these are another examples that, like I said, I'm still working on, which is why I always tell people you still got to keep learning. There's nothing that should make you feel like you're good. Like nobody is good. Okay. The people that make millions of dollars are still learning. Okay. It's different nuances and different things you could do and all that type of stuff. All right. So just wanted to help y'all understand. So moving forward, please, I beg y'all, if y'all are, I don't know what other trades y'all be taking, but if y'all are taking my trades, allow me to guide you on what I'm doing. So if I'm like, adjust your SL to break even and move it up, do that. Stop exiting your trades manually, okay? Please. I don't want to be the only person, because I know for a fact I'm the only person still holding Euro JPY. I know this. I don't have to ask y'all. I know it, because I know ain't nobody still holding this thing. But y'all missed out on 240 pips with an R&R of 1 to 16. Okay. Now, with that being said, let's go ahead and talk about the new setups, because that's an old setup. Okay. So I have 2 potential setups I'm looking for tonight. Which one am I going to talk about first? Let's talk about USD Cad first, right? Let's talk about USD Cad. USD Cad. Yeah, we'll talk about USD Cad, right? So as usual, what I'm gonna do is I'm gonna pull up a different data feed. So USD Cad. All right, Oanda. All right, bet. I actually like USD Cad. USD Cad, I'm gonna be honest, is a little aggressive. Because like I said, this is obviously a very aggressive downtrend, but I like this. This definitely looks like an accumulation model schematic. I said model, accumulation schematic right here. And I like this aggressive move to the upside, leaving this imbalance right here. But yeah, so as usual, you guys already know I have 4 different things that I like to be able to look for as far as my initial confirmations: the trend, my bias, which is whatever direction I'm looking to take it in, divergence, and then exhaustion, right? Exhaustion in the market. So if we're looking at the overall trend, right, technically this is an uptrend, okay? From what I see, right, we have an uptrend. The market broke structure, okay? Very aggressive moves to the upside, broke previous level of structure. So what I would perceive this to be is the retracement for the continuation. So what I will do is I would take my Fibonacci and look to see how deep of a retracement we have gotten so far. And for me, y'all know me, as long as I get a retracement anywhere within the 61 to 88.6 fib zone, that's valid for me to be able to look for a potential setup in the given direction, okay? So I'm personally going to have my bias sticking with the trend as an uptrend. So uptrend, my bias is going to be also up based off of what I'm showing you. So pretty straightforward. Break a structure, aggressive moves to the upside. This would be considered to be the retracement for a continuation, okay? Now, What are we doing next? Okay, now we're just going to go ahead and focus on this area right up in here. Right, we're just going to focus on this area right up in here. Okay, now what are the things that I always tell you guys, right? Divergence and exhaustion. Divergence and exhaustion. Let's see if we can detect the exhaustion first. We definitely can. So notice all up in here, the market is getting exhausted. So from here to here, the exhaustion basically initiates here. And you can see it continues all the way over here, but the market is still dropping the entire time, which is why I always repeat. Don't initially just look to randomly hop in on a trade as soon as you notice exhaustion. So wait, be patient. Let the market give you more telltale signs. Maybe a break of structure, maybe, you know what I'm saying, anything. But don't just randomly hop in, because obviously if you would have been trying to catch the low, your stop loss would have just kept getting hit. But here is the obvious exhaustion happening. The market is saying, I'm getting tired, right? I done ran a mile. I'm tired. I need a water break. I need to go take a hot bath with some Epsom salt because my bones are sore. This is what the market is saying, right? Now, your job is to be able to wait for the market to give you the signs that it's about to start going in that direction. As far as if it's exhausting to the downside, when is it going to start giving you the signs that maybe it's ready to start going up? Okay. So we detected the exhaustion. What's the next thing? Divergence, right? Y'all know how I feel about divergence. Divergence is bay. You feel me? So I'm going to go from the candle to the line chart. Okay. I'm going to take it from here to here, right? So remember, divergence is if we're utilizing an indicator to detect divergence, whatever direction the indicator is going in, we would like to see the market going in the opposite direction. So if I were to take my vertical line, mark it up from here, okay, to here, let's see. So if the RSI is going up, that means we would like to see the market doing what? Going down. That's exactly what we have, right? This is going to be our divergence, okay? So we now have discovered the trend. We know what my bias is. We've detected exhaustion. And now we have divergence, right? Those are going to be my 4 primary confirmations that you guys see me utilize on literally every single setup. The only thing I usually sometimes may not have, I don't always have divergence. Usually I'm pretty much always going to have it, but sometimes it may not be there. But y'all know whenever I have divergence, a lot of times that's going to be, a really good confirmation. So we already have all of our confirmations. Now what's going to be some other confirmation we could utilize just as far as like simple market structure. Okay. So it'll be a little easier to see if I drop down to a lower time frame, right? Now we want to be able to see, do we see any types of break of structure? Yes, we do. Okay. This will be a break of structure right here. I like my stuff being perfect. All right. So this would be considered a BOS right here, right? BOS, break of structure. What does that mean, right? Whenever a previous high is being broken, okay? So in a nutshell, what you guys really want to be able to see is the market is trending down, right? Forms this high. The market comes above, breaks this high, gives you a retracement of some sort, and then continues, right? This is basically what you want to see. It's not the prettiest thing, but this is kind of like the concept that you want to see. Whenever the market is trending down for so long, you want to initially see it break a previous high, right? Give you some sort of retracement, and then give you that continuation, okay? So this is basically what you guys are seeing. The market is dropping, right? Creates this high, drops, comes back up, breaks this high. So now you want to see a retracement of some sort to be able to take that continuation, okay? So let's go ahead and get rid of all that. So we do have the break of structure, right? Now we want to be able to see what? Some sort of retracement to be able to take the market higher. So now that we understand we got that break of structure, that's going to also give me more confidence. So I don't feel like I'm just randomly hopping in and trying to catch a bottom, okay? What's the other thing that we have? If you guys notice over here, we had a liquidity sweep, right? So it's always nice to see that the market has captured liquidity. Notice that, right? This is beautiful, okay? Notice, remember when I told you guys, anytime, I ain't gonna say anytime, but a lot of times the way that you can validate a liquidity sweep is whenever you see the market peak above or peak below a previous high or low, and immediately go in the opposite direction very, very aggressively. Okay. So notice how the market set this low, right? It came back, barely peaked below it, and within that same wick, immediately went to the opposite direction with aggression. Okay. About 70 pips, right? Then what did the market do? The market gave a retracement, right? How are you knowing if this is valid? Because the market did not come back and break this low that it just set with the liquidity sweep. So now we're actually starting to look to see our uptrend bias to see if this is going to be valid. How do I validate it? In my opinion, when this low came and swept, the market gave a retracement. It did not sweep this previous low, and then what it exceeded to do was it came higher, broke this level of structure, and now all we're looking for is some sort of retracement to be able to take the continuation. So all of this is lining up on top of the other 4 confirmations that we initially were looking at, right? So I'm really liking exactly what I'm seeing, okay? What's going to be the next thing, right? So if we go back to that 1 hour, notice the gap, inefficiency, imbalance, whatever you want to call it, that the market left for us right here, okay? So a lot of times, what you want to see is some sort of impulsive move in the direction that you want to confirm that the market is maybe trying to go, because that is going to give you an area that you can wait to get that retracement to, right? Before you take the move higher, okay? So every single thing that I would normally look for on a setup, I'm seeing it. Now, I need to, one thing I want to be able to tell you guys as well too is targets. So I still feel as though this market could potentially drop lower, but I wouldn't be surprised if before it does that, maybe it comes back into this imbalance, okay? Something like this, before maybe it continues on its downward trend. So this is not necessarily going to be a swing trade like a Euro JPY that I'm not looking at this from that perspective. I'm understanding that this essentially is basically a short-term buy to have the continuation of this down move, right? So I know exactly what I'm looking for. So I got everything in context. So now what we want to do is we want to start looking for our entry. Now, you guys know what I like to do? Whenever I'm looking for my entry, I always tell you guys, I want to ultimately be able to find the biggest engulfing or institutional candle on the highest time frame. So let's start working our way up, right? Nothing. Well, it's 2 kinds of people. Some people like trading off of these. So a couple of the people that I were on a call last night, I remember Axel was on the call. I was teaching you guys about, there are some people that may prefer to trade off of this candle. So maybe instead of a bullish candle for an up move, maybe they want to be able to trade off of the last bearish candle, right? Before the market went up and broke above this, which is, creating some sort of mitigation. So this right here could be like a zone that you could be looking for. You could essentially be looking for something like this, right? But me personally, I would prefer to have a bullish candle to be able to take an up move. I would prefer to have a bearish candle to take a down move. But this is just a different way that you can trade using similar concepts, right? So let's keep working our way up. 4 hour, right? 4 hour is whenever we see our first bullish engulfing candle, all right? Now remember, we want to find the biggest candle on the highest time frame. Let's go to the 5. All right, it's getting bigger, okay? Let's go to the 6, right? The 6 is about the same size. Notice the 6 is about the same size. It's just it's a different size. So let me explain to you guys which one did I end up picking? The 9 hour. So let me explain something real quick too. Notice how the 5 hour and the 6 hour are the same size. How do I know that? This is a 6 hour, right? So if I go to the 5 hour, if I literally just move this box up, you see how it basically fits perfectly? Like it basically fits perfectly. It's just a little higher up. If it was up to me, I would personally go with the 6 hour because the 6 hour has less wick on it, right? Notice how on the bottom of the candle, right? Notice how on the bottom of this candle, how little of the wick it is compared to the 5 hour. If I go to the 5 hour, right? Notice how much bigger this wick is. So you always want to be able to stick with the candles that have a smaller wick on it. That's just like some additional information. But ultimately, the 9-hour ended up being the biggest candle so far. Okay. So that's what we rocking with, the 9-hour candle, right? That's going to be the biggest candle on the highest time frame. Okay. So now that I've discovered that, you guys basically already know how I do. So now what I'm about to do, and I'm about to go ahead and look for that 50%. Okay. Go ahead and look for that 50% of that candle. All right. Bada boom, bada bing. 50 level, right? Like so. Like my stuff being relatively perfect, if possible. Okay. Now, like I told you guys, I'm going to draw an entry zone from the opening of the candle to the 50%. Okay. And this is going to be our buy zone. Now, you guys know I like setting pendings. So obviously, I'm not going to send you a zone. I'm going to give you an exact entry. How do I get that? I'm going to take my fib once again. I'm going to put it back on the regular settings. Okay. Whoops. All right, bet. And what I told you guys is I ultimately want to be able to use one of two levels, right? I want to be able to use a fib level that is going to be within my entry zone. And as I told you guys, I like more aggressive entries because I'd rather be in drawdown than miss the setup altogether. I don't necessarily have to get too cute with my setups. I don't have to get too cute with my stop loss because I know how big of a stop loss I feel comfortable with. So always make sure you guys define how big of a stop loss do you feel comfortable with. 50 pips, 20 pips, 15 pips. It depends on person to person. For me, I know that I specifically trade off of higher time frames. So I can't really just have a too small stop loss because I'm not going to be able to take advantage of a lot of the setups that I trade off of. So I came to 40 pips. 40 pips is my max. So literally anything within 40 pips, I'm Kuji down to the socks. You feel me? Because my risk to reward is always going to be good for me, right? So I'm usually always going to go with the fib level that is going to be closest to the opening of the candle. Because as I always tell you, the market is never guaranteed to give you the deeper retracement. It obviously can, but it's not guaranteed, and you don't want to miss out on the whole setup. So by default, I'm going to go with that 61% entry, okay? So like this. This is basically what I'll be looking for. So in a nutshell, this will be the setup. So now if I go back to USD Cad, you guys see exactly why I marked it up the way that I marked it up, okay? Now, as I always tell you guys, whenever I do my stop loss for a bullish candle, it's always going to go below that wick. For a bearish candle, it's going to go above the wick. I'm always going to add 2 pips of spread. So this was 33 pips here. I add 2 pips of spread. It gave me a 35 pip stop loss. I'm good with that. If I go back to the 1 hour, this is sitting nicely within this imbalance, okay? So notice how my entry is sitting within that imbalance. I'm good with that, right? And that's cool. And at this point, I like to trade. Now, I told you guys in some instances, I'm able to find tighter stop losses just based off of, scaling down. I didn't really see anything that made me feel comfortable, reducing my stop loss because this is just all imbalance. Like if there's another institutional or engulfing candle somewhere in this area, I could possibly reduce my stop loss, but there's not, right? Maybe you could say I could put my stop loss underneath this candle. I could, but I don't necessarily know how comfortable I feel doing that. It's all about comfortability. So never force something if you don't feel comfortable doing it, because as soon as you get in, everything is all good until you get in drawdown and then you start double guessing yourself, right? So for me, I like to be able to have the candle be close to the entry that I'm already looking to take. So like say for instance, if this candle was closer to this entry, it'll be a little different. But since it's a little lower, the market could retrace a little deeper. So yeah, possibly I could put my stop loss here based off this 15-minute candle, but I don't feel super comfortable doing that. So like I said, I'm just giving you guys different dynamics. So if some of y'all want to be able to adjust your stop loss and make it smaller, if you do so, maybe you could put it underneath this 15-minute candle. I'm just telling y'all what I'm going to do, but I'm fully aware of the different scenarios. So I'm going to keep my stop loss below the 9-hour candle down here. But you guys are seeing scenarios where I have reduced my stop. This is just not one that I feel comfortable doing. So we're just going to stick with the bigger stop loss on this example, right? So the 9-hour candle is what we're rocking with. Hopefully the market obviously gives us that retracement. Because earlier this week, we were initially looking to sell this off of this candle. But now that we see the schematic that formed here, I'm more so favoring the upside. So yeah, it could be a benefit if the market rejects off this candle to push it down into our entry to obviously give us the ability to go higher. But I am aware that this candle does have some significance. So, you know, we'll see how it goes. We're kind of trapped between two different significant points, but now at this point, I'm more so favoring this. But yeah, that's basically it. So that's going to be USD Cad. I'm gonna set an alert. I'm not gonna send it out just yet. If y'all want to put this in before y'all go to sleep, y'all can. So basically what I'll do is for anybody that wants to put this in before y'all go to sleep, I'm gonna give y'all this screenshot real quick. And all y'all really got to do for anybody that doesn't know how to do this without me typing it out, just look at the numbers to the right. So this will be your entry in yellow. This will be your stop loss in red. This will be your take profit, final take profit. Obviously, final take profit. This is not like TP1. This is your final take profit, right? I'm gonna go ahead and drop that in the chat. Go ahead and take advantage of that. Yeah, I appreciate it. Shout out to Ray for saying that, because like I told you, I was late, man. I mess around and I fell asleep. I fell asleep and woke up to a text message from my boy Penitentiary Trader. He was talking about, man, you're not gonna get on tonight. I'm like, damn, it's 1:30. I swear, I remember sending out 15-minute warning, and then I woke up and it was 1:30. I was like, oh snap, my bad. So I apologize, y'all. I'm wide awake now, but yeah, I was out for the damn count, boy. I ain't gonna hold you. I ain't gonna hold you. My head touched that pillow and it was over. It's like Mike Tyson punched me in the face. I was out. So that's gonna be that. So basically, let me also teach you guys. I want to teach you guys something about how to be able to take advantage of, because I don't speak that much on targets as far as how to be able to identify different target levels. Because, you know, obviously knowing where you want to take the market is literally just as important as entering. Because if you get in a trade, but you don't know where the hell you want to target, it's an uncomfortable feeling. Because every time the market starts pulling back, you're going to second guess like, oh man, I should have took profit there. Or so you don't want to have that feeling. So you want to know exactly where you expect the market to go. Okay. And I'm gonna be honest. A part of me is saying that we might not get that full retracement. This candle may be where the market is going to reject from, as we see. So that's another reason why I don't just want to send this out yet, because I don't want to send it out to have to say deleted. So I am aware of this. So we'll see how this plays out, but kind of how this is reacting, it may just take off from here. I don't know, but I'm gonna keep this marked up, and I already dropped the chart in the chat. So if I were y'all, before I go to sleep, I might put it in for y'all. And worst case scenario, what I'm gonna do is, if I don't officially send it out, once this basically invalidates, so basically if it ends up breaking this high, I'm just gonna go on my personal telegram only, and I'm gonna say, hey, if y'all were on the call, delete USD Cad if y'all put it in trade. So that'll be our signal, basically. If y'all wake up, you know, in a few hours and end up seeing that message, it just means that it just kept going higher. But I want to talk about the target. So as I say, target one is always going to be pretty self-explanatory. So you're literally always going to target, right, that initial high that breaks above that candle. So 9-hour candle, right? The peak of that candle is up here. Okay. That is where you'll put your first TP right here. All right. TP1 is always going to be basically right there at that high or at the low for a bearish candle. Now, all the other targets, it kind of depends on you, but as far as this right here, I'm gonna tell you guys how I came across this, right? So personally, I don't like entering off of imbalances, but I like using them as targets. I'm gonna repeat that one more time. I don't personally like entering off of imbalances, but I like utilizing them as targets. So what I ultimately try to do with imbalances, if I'm looking for them as a target, is I like to be able to target the 50% of the imbalance. I don't want to target the opening. I don't want to target the close. I want to target the 50%. So the way that I find the best looking one is I usually start from the highest time frame and start working my way down, and I want to see which time frame has the biggest imbalance. So we got the daily, we got the 12-hour. Now notice the 12-hour has a pretty big imbalance, but I also want to have the imbalance that's highest up. So notice if I were to move this down, this is now lower. So it's basically the same size. Look how it literally still fits perfectly from this wick to this wick, but it's lower down. I want to be able to have my imbalance be up as high as possible, right? So notice that specific difference I just showed you guys. This is still technically the same size as far as gap, but this is lower down. I want to have my imbalance be high up as possible. So 11-hour, right? Same thing. If I were to move this down, this is lower. And this is not as big, right? Notice how, well, no, this is basically the same size, but notice how this is also lower. So I want it as high up as possible. 10 hour. That's why I ended up going with the 10 hour. The 10 hour is the biggest one that's highest up. If I start flipping more, you guys are going to see the 10 hour ultimately is going to be the best looking one. Same thing. If I were to move this down, it's lower. I want to have the imbalance that's highest up. So that's basically why I ended up coming to the 10 hour being the one that I wanted to rock with. So kind of just like a little gem of how, you know, basically I look to target imbalance. I really love targeting imbalances because a lot of times that 50% gets hit perfectly. But yeah, so that's pretty much it for USD Cad. Like I said, I'm hoping it doesn't take off, but honestly, if this breaks this high, it's probably gone. I'm gonna be real with you, because like I said, it's probably gonna have a hard time, you know, breaking below this area. I'm fully aware of that. Because if you look at lower time frames, this is a lot of structure right here, and it is already rejecting. So, you know, truth be told, this just may not give us the opportunity, which it is what it is, but it's always good to be able to mark up stuff just for homework, you know what I'm saying? So that's USD CAD. We'll see if that even activates. AUD USD might be the same thing. Like this might not even give us a pullback the way that's looking now. It might just keep dropping. I was wanting it to react off of this, you know, to possibly give us that move up, but we'll see. So let me go ahead and break down AUD USD, and then we'll basically be done for the night because, you know, it is a Friday. It is also the beginning of the London session, so not to say there aren't going to be any other setups tonight, but you know, Fridays I usually don't really try to force anything. I kind of just go with the flow. You usually want to make the majority of your money throughout the week. Friday is kind of like a bonus day. That's kind of like how I view it. All right, but so let's go ahead and go over AUD USD. Now, AUD USD, the trend of AUD USD is pretty clear. It's going to be a downtrend. All right, so we had the market created a peak up here, right? Ended up giving us a very aggressive move to the downside at about 560 pips. It also broke a level of previous structure over here to the left. So what will we perceive this to be? A retracement within the overall downtrend. Now, one thing I am aware of is this didn't technically give us, you know, the level of retracement that I would normally like to see. We didn't, I mean, we came close, but close is not necessarily valid. So we didn't actually get that retracement that I would like to see, but I'm gonna tell you guys why I still like this setup. Okay. So if you don't know, my bias is gonna be a down. It's not a down. My bias is gonna be a sell. So I'm looking to trade with the trend. And you guys know it's a lot of examples to where I trade against the trend, but my bias is pretty simple with these setups. I'm trading with the trend. So downtrend, right? Aggressive move to the downside. This high did not get broken. We got to break a structure. This is going to be perceived to be the retracement for the continuation. But we did not actually get into the deeper level of the fib that I would like to see. This is obviously a 50% retracement, you know, if I were to change this, but that's why I don't even have the 50% on that fib, because I would prefer it to get at least to the 61.8. So technically speaking, the 50% is valid for a retracement. I would just prefer the 61.8. So it's not like this is the worst thing, because we do at least have a 50% retracement, but you know, I prefer at least a 61.8. But regardless of that, let's go into why I like this setup. I don't know if you guys see it, but this is a head and shoulders pattern. Plain as day, literally. More so right here. Head and shoulders, head and shoulders, head and shoulders. Head, shoulders, knees and toes, knees and toes. Right. Left shoulder. Head. Right shoulder. Okay. Literally textbook head and shoulders patterns. This is really like the main thing that I'm fixating on. Okay. Head and shoulders pattern. Right. So that's why I was really paying attention to for the most part. Now, with this, let's talk about it, right? Let's talk about it. So if we actually look at, I don't think I had any divergence on this. Yeah, we don't. This is the same thing. Yeah, so we don't really have any divergence on this, but we obviously have the exhaustion, so we can point that out. So we have the exhaustion here, which obviously is within this area. The market gave a very strong move to the downside. We also have some exhaustion right here. Okay, so we don't really have divergence, which obviously is what we would like to see. But as I literally told you guys earlier, we don't always get divergence, but it doesn't mean that it's a bad trade to take. It's just I would prefer to see it, but I'm not just going to pass up a trade altogether if I see other things that make sense, right? So we do have the exhaustion, but no divergence. But like I said, we have the head and shoulders as a confirmation as well. So the other thing that I was focusing on is right here. So notice how the market reacted off of this and remember, like what I just told you guys, right? Remember how I said there are instances to where you can technically sell from a previous bullish candle and you can buy from a previous bearish candle. Because like I said, I personally want to be able to see the market react off of this previous bearish candle, right? To possibly push this up into the entry that we're looking for to sell it down. So I'm showing you both dynamics. I want to be able to utilize this last bearish candle to push this into our entry, but this reaction happened from a previous bullish candle, right? Notice that wick entry right here. I personally wasn't looking to enter from here, but I'm glad it reacted from here, okay? Because that gives me the confirmation to look for that sell, and it also confirms the head and shoulders, right? So now that I saw the market react off of this, we also have what? All of this imbalance that was up in here on top of that. So all of this is making sense as to why I reacted and why I'm looking to continue taking the sell. Now, pretty much straightforward. At this point, you guys already know how I'm getting down. I'm looking for an entry. You feel me? So 2 hour, 3 hour, 4 hour, 5 hour. This is our first candle right here. Okay. So remember, I want to find the biggest candle on the highest time frame. On top of that, we also see we got this reaction right here. Perfect. Okay. 6 hour, right? Obviously, the 6 hours is a lot bigger. So we're going to work this way up. Okay. And this is what I told you guys. I don't know if you guys remember, but I want you guys to think about this moving forward. Candles that have little to no wick are going to be some of the best candles to trade from. So notice how this candle has little to no wick on it, right? Little to no wick on this candle, okay? I like to see that. But this technically wasn't the biggest candle. So I'm going to just fast forward. The 9 hour ultimately, it's not drastically bigger, but it was bigger than. So the 9 hour is actually the candle of interest that we're going to focus on, okay? So now that we found this candle, okay, the next thing we want to do, want to go ahead and take that 50%, all right, like so. So I want to go ahead and take that 50% of the candle like that, all right, 50, all right, cool. Then we're going to draw our entry zone. So from the opening to the 50%, all right. Then from here, we're going to pull out our other fib and see if we have some fib levels that go within that box. So from high to low, go ahead and switch it back to the regular fib. All right. So we got two different fib levels. We got the 71. We got the 61. As I always tell y'all, I'm always going to go with the more aggressive one. So I went with the 61. So I can go ahead and erase this now since we've basically, gone through everything. And then this is what I came to. Okay. Now, same thing. A little bit bigger stop, but like I said, it fits within my parameters, which is 40 pips. So as I show y'all, if I scroll down lower, as far as I'm concerned, there's not like another institutional candle that would make me feel comfortable reducing my stop. So that's why I'm just going to allow the stop to be bigger. And like I said, this is what works for me. So I always let people know what works for me may not work for you, right? I don't feel comfortable putting my stop above this small ass 15-minute candle. You might. I don't though, because there's still like imbalance up here and stuff like that, right? So I don't feel comfortable doing that. But some of y'all might be like, well, shoot, I'm going to just put my stop above. You can do that. This is a really small candle, so I don't really know how much volume is in that candle. I feel like the market could blow by that. So that's why I'm going to keep my stop where it's at. But like I said, my risk to reward is always good. So I'm okay with having a bigger stop because I've already defined 40 pips as my max. So what are we going to be looking for as far as targets? TP1 would be right there, right? TP2 would be down here. Okay. That'll be about, I would just round that up to a 3-to-1. So, because this is, yeah, 1.5 to 1. So yeah, I would just round this up to a 3-to-1. So something like that. So that'll be about TP2, basically at that 61.8 extension. And then TP3, shit, I'll probably do something like this for TP3. And then target somewhere. I'll probably do something like this right here. Right there in that imbalance. That'll probably be TP3. That'll be about 4.5 to 1. Because I don't necessarily because I don't know if the market is gonna break this low or if it's just gonna react and continue going higher. So I do something like that, and then I just put my final target down here. So this is basically exactly how I would look for my targets: TP1, TP2, TP3, and TP4. Straight like that. All right. But yeah, so overall almost a 7-to-1. I'm not mad at that. 250 pips, good swing position, and that's how I'm feeling. So same thing, like I said. I mean, who even knows if this is going to give us an entry? It might be like USD Cad, act like a little B word and just take off without us. I have no idea, but same thing. What I'm gonna do is I'm gonna drop this chart in the chat. If y'all want to, y'all can put this in before y'all go to sleep. Because obviously, if I end up calling it out, a lot of y'all probably be asleep. So, so I'm gonna just send y'all this chart. Same thing. This will be your entry in yellow. This will be your stop loss, and then you literally see all the targets right here. Okay, I'm gonna go ahead and drop that in the chat. I mean, and I'm just gonna say it because I'm awake now. All right, cool. So let me scan the market one more time, but I'm pretty sure there's nothing else here before I let y'all go. Let's see. I was looking at this. This wasn't that appealing to me. They didn't really have a good looking candle for me to be able to enter off of. Yeah, I don't see anything. I mean, maybe that, but I'm not. This isn't like my favorite looking setup, so I don't want to force nothing. Yeah, that's just going to the moon. I'm gonna leave that alone. 80 chef. I mean, 80 chef is similar to 80 USD. I don't think I found a good looking candle on this either. Let me see. Yeah, because one thing I don't necessarily care for the candles that have already, like the market has already pretty much touched. Because one thing I learned is whenever the market touches that candle, it's not going to be the same strength if it comes back. So since the market already reacted off of this candle, I'm not crazy about it. If it comes, like, see that the market has already tested this candle. So that's another example you guys kind of want to be aware of too. If the market has already tested this candle, it can still react if it pulls back. But from my personal experience, it loses strength once it's already touched that candle. Because once it comes back, it doesn't have to react again, technically. So for that reason, I wouldn't actually be looking for AUD chef. But AUD chef definitely looks similar. This is another head and shoulders pattern technically, but I would leave that alone. CAD chef. This actually might not be bad. Hold on, let me see this. Got imbalance over here. Reacting at a previous peak. Did not take out this high. Nah, yeah, it already reacted. That's the same thing. Yes, it's already reacted off of one of these candles. Yeah, never mind. Same thing, literally like how I told you. That happened real quick. So even though this 3-hour candle didn't get touched, all these other candles got touched. So this candle, market already reacted. This candle, market already reacted. And this is just me personally. Like I said, I'm not doing this just by guessing. I've done a lot of back testing. So for me, anytime that candle's already been touched and the market starts moving away, by the time it comes back, it might not be the same strength. So I would just rather stay away from those altogether. And that's the thing that you guys really got to focus on: process of elimination. What trades are you going to take and what trades are you going to be okay with passing up? It's not about coming back, because think about it. If I come back and I see that the market comes back up here and then drops, I'm not going to feel it. I'm not going to be like, oh, I should have taken it, because I back tested enough to where I'm comfortable passing up trades regardless of what happens after the fact. Okay. So I don't care what happens. I'm not going to take it regardless. So that's just like another gem. If you guys apply that, like once that candle's been tested, I'm personally going to leave it alone. This was something I was looking at as far as this could actually be a good play potentially. I know Freddie had marked this up. I'm not crazy about the re-entry myself though, to be real, because I was really looking for I was still looking for this. Like this is what I wanted. I wanted the market to be able to come back up here. So I kind of have a thing to where if I don't actually get the entry that I want, every other entry makes me feel uncomfortable. So this is the entry that I wanted. Came close, no cigar. That's just me. So like I said, I'm not babbling, but I'm just giving y'all different ways that I look at the market from back testing. If I don't get the entry that I ultimately wanted, every other entry that I could possibly take to still get in on the move, it just makes me feel uncomfortable at that point. So technically speaking, you know, this could be a good trade for the market to come back to this 4-hour candle. But based off of what I just told you guys, since I didn't get the entry that I wanted, emotionally, I would somewhat feel uncomfortable getting in this. That's just me. But this could be a good setup, truth be told. I might change my mind, but I don't know. I ain't gonna lie, this is a good setup. I really could just be overthinking it. Let me see something real quick. Because this definitely looks like it wants to keep dropping. Let me see real quick. Because one thing I do know is it is definitely not going to come back up here at this point. So I can kind of just go ahead and give up on that dream. Because last thing it's probably going to do is break these highs, come back here, and then I doubt that's going to happen now. Since it didn't touch it before it dropped, it's definitely not going to come back up here. So this is a little bit different than what I was saying, because I know that it's not like if it hits the stop loss for this, I don't feel like it's going to react off of this and drop. I feel like if it hits the stop, it's just going to keep going. So let me see. I mean, it says a good setup at the end of the day. What are we looking like? That don't look bad. Let me see what this hitting for. So I would be looking at entering somewhere right here at the 78. So we probably had like a 24 pip stop. Yeah, I ain't gonna lie. Yeah, I'm probably gonna call this out, because at this point, I'm aware whenever sometimes I'm overthinking stuff too much, and I think this would be a scenario. Because like I said, even though this is an entry that I wanted, it just doesn't seem plausible that, what the hell? I don't even talk like that. I said plausible. That's hilarious. It doesn't seem realistic that the market is going to actually come back to this area, since it already broke more structure and kept dropping, and you got this fat ass imbalance right here. So yeah, I'm gonna be real with you. I'm gonna just go ahead and mark this up right now. So we technically got 3 different setups. I'll be honest, I'm kind of lazy. I don't feel like breaking this setup down. I'm gonna just mark it up and give it to y'all. So give me a second. I like to keep my old markups up there too. Just because I'm gonna make a YouTube video for that. Let's see. So 4-hour. All right, let's get down with the get down. So let's make sure we trading off the biggest candle first. All right, so yeah, that 4-hour is definitely gonna be the biggest candle. Go ahead and get that 50. Drop and give me 50. Drop and give me 50, girl. Drop and give me 50. Okay. Take that. All right. So y'all can see, go get our entries on. Because now I'm thinking about it, this might be the only one that actually gives us a trade, because AUD USD and USD Cad may not actually give us that pullback. So I don't want to just pass up a good opportunity. Let's see. And I do like that big ass imbalance up in there. And, you know, shout out to my boy Freddie. My boy Freddie been sniping the markets this week. So I like his analysis on this, even though, you know, I have my own way of looking for entries and having targets, but he definitely did call this out as far as a re-entry. So I do agree. Now that I'm looking at it. All right. Entry is gonna be right here at that 78. Like that. Okay, we'll rock like that. Okay, 78%. So I ran that to 22, so that'll be a 24 pips up. And I could still use the same targets that I was already looking for originally. So that would be TP1 right here. That would be TP2. And then honestly, I would move this lower at this point. And pull out my cheat code. Okay, previous daily low. What would this be? That would be about, that'd be a 3-to-1. Previous weekly low, I probably, hold on. Nah, I probably just target that previous weekly low. So TP1, that's a 3.3. Nah, this is straight. Swing that joint. So what I would do then is I would switch this up. Let's see. So I move this probably down to this next previous daily low. Like that. Okay. So we got a 3-to-1. Almost a 7-to-1. Oh yeah, I like that. Yes, sir. All right, bet. I like that. Okay, so we got that marked up officially. Let me save that. Add that to the roster. All right, let's keep it pushing. See if there's anything else. I ain't gonna lie, I wasn't initially looking at this, but I'm not crazy about this because we don't really have any break of structure. So I like how this looks, even though this probably ain't gonna pull back, but I don't really see any break of structure. So since we got other good looking setups, that just seems too risky. We already went over that. So let's swipe these lows. Is there any entry up in here? Maybe something like that. But this is definitely not going to happen tonight. Divergence. This might be something I keep marked up for next week. This is definitely, I doubt this is going to give us a pullback tonight. It definitely could be an idea though. What time frame is that? I just keep that on the hit list because this is officially a bullish candle. So that could possibly be a possibility. Maybe it breaks this high, pulls back. I just keep that marked up. What time frame? It's just a 3 hour. Okay, I'll put that on the hit list. That might be something for next week. Euro NZD. That just looks like that's just gonna keep going. Don't see any pretty candles, so I'm gonna leave that alone. Euro AD. Might be a little risky. Might be a little risque. Yeah, I'm not crazy about this. Euro Chef. Not really too much going on. Euro GBP. Euro GBP is moving. Is there a re-entry on Euro GBP? Not one that I like. Yeah, so I'm gonna leave that alone. GBP USD is dropping. GBP Chef. That's falling. GBP AUD, that looks like that's definitely just gonna keep selling off. GBP Cad, nothing there. GBP JPY, still just dropping. USD JPY, not really crazy about it. CHF JPY, not really crazy about it. NZD Chef, it's just falling out the sky. NZD USD is falling out the sky. NZD Cad is falling. Gold. I be needing like perfect looking setups on gold because I really don't trade gold like that, so I'm gonna just leave that alone. USD Chef. Not really crazy about it. USD Cad. Still waiting on that. All right, so USD Cad, AD USD. I'll be honest with y'all. If I was y'all, I wouldn't even necessarily put in USD Cad and AD USD because I don't even know if those are gonna activate. If anything, I'm gonna just officially send out Cad JPY. And USD Cad and AD USD, I would just, if y'all are awake when I send it out, cool. If not, I wouldn't really worry about it. Because I just don't know if these are actually going to activate. It might almost be pointless to even put these in the first place. Because I'll be real, I'm not even going to put these in myself. I'm just going to wait. So I don't want y'all putting in a trade that I don't put in. So I would just wait. And I'm really just going to call out CAD JPY because this looks more realistic as far as something that might actually activate tonight. So let me just officially mark up CAD JPY and then send that out and then we'll call it a night. Okay, so 89,800, 88,780, and then okay. All right, let's go ahead and mark this bad boy up. Put this over here on my other screen. Okay, let's see. Bada boom, bada bing. All right, let's get it. Let's get it cooking with Crisco. All right, go ahead and throw this on the chart so y'all can see. All right. Excuse me. Nine one 450. Oh shit! What the hell I just do? All right. 91450. Stop was 24 pips. 91.690. Let me verify since I got multiple things on over here. So yeah, 690. And then yeah, 9150. Okay. TP1. 90.650. That shit. 80 pips, 3.3 to 1. Or 3, I just say 3 to 1. 3 to 1. How many pips? 80. 90.650. So once again, entry 91450, 91690 for SL, 9650 for TP1, TP2. Let's see. 89.800. 165 for Sawar, 6.5. So R&R 6.5. 165. 89.800. All right. TP3. Let's see. 88.780. 267. What is that? 11 to 1. 267. All right. 88.780. And then swing target. 87.450. All right. 400 big ones. Not mad at that. What's the R&R? 16.5 to 1. $87.450. All right, bet. So obviously I'm about to send this out, so I'm not even going to drop this in the chat. Obviously, I'll just go tap into whatever correlating chats. So let me copy this real quick. Copy. All right, so put that there. Let me get a nice, beautiful picture. Okay. All right. Copy link. All right, so let me go ahead and send this out to the corresponding chats. Y'all should see this pop up in one of these chats relatively soon. So I sent it out there. Sent it out there. And let me send it out to the last one. All right. All right, bet. So looks like we're good, guys. So we do have an official setup, like I said. Maybe USD Cad or AUD USD also gives us an entry as of right now. I just have no idea. They're not really giving us. I mean, maybe this is gonna start moving up. Who knows? Like I said, if I send these out, hopefully y'all are awake. But it's up to y'all. If y'all want to put in USD Cad or AUD USD, I'll drop the chart one more time. I'm just telling y'all, I'm not gonna put these in right now, just because I'd rather wait to actually see them retrace. But if y'all want to do whatever y'all want to do, y'all can. I'm gonna be honest with y'all. I'm not gonna tell y'all to delete these. Just kind of take it upon yourself. So if you decide, that's one thing I don't want to do. I don't want to be responsible for nothing. So if y'all put these trades in, it's at your own risk. I'm not gonna tell you how to manage it. If I don't officially call it out, I'm not gonna tell you what to do with it. You kind of got to take that upon yourself. So I'm gonna still give this to you because y'all are adults. Y'all can do whatever y'all want to do. But I'm just letting y'all know. You got to have to make the decision on if you're gonna delete it if you put it in. If I never send it out, you got to figure it out from there. Because I don't want to be liable for anything and tell myself because I might forget. So if I don't send it out, I am not responsible. So that is AUD USD. I'm also give y'all USD CAD. So obviously you'll have the final targets on each one of these. You'll also have the why does that look like that? That should look stupid. All right. Take this picture. So y'all definitely make sure y'all go look in the Zoom chat so y'all can get those markups. So obviously copy it, go paste it in your personal Telegram, or save it in your notes on your iPhone, whatever you want to do. So I'll leave this on, so I'll stay on for like another 60 seconds, and then this is basically it. Pretty much go call it a night. So I'll be on here I'll just stay on here until 3 o'clock even. So y'all got about 4 minutes. 4 hour. All right, go ahead and save that. All right, cool. Oh, this is one thing I want to be able to talk about too, so y'all can see me do it. Because I know let's talk about this in our chat earlier, because I see Ray still on the call too. I strongly recommend that you guys pay for the pro version of TradingView, just because it's going to give you the alerts. You technically, I think you get one or two. I think it's just one alert with the free version. It's not a lot of money. It's literally $15 a month, but it obviously comes with more than just the alerts, but that's majority what I use it for, the alerts and indicators and stuff like that. But the alerts is going to be important. I think it gives you like 20 alerts. So you can literally set an alert for everything, because all that checking your phone every 10 minutes and all that, that's OD. So you can literally set an alert for your stop loss. You can set an alert for the entry. You can set an alert for the take profit. I personally don't set an alert for stop loss because I'll be honest, I don't want to get an alert saying my stop loss got hit. I'll be real with you. I don't want to check my phone and see SL got hit. I don't even care to see that. I would just rather look at the chart and see that the candle blew past this red area. I'm gonna be real. I don't want an alert saying my stop loss got hit. I'll be honest with you. That's not what I want to see on my phone. The only thing I want to see on my phone is sell limit active, buy limit active, and take profit got hit. So this is what I'm finna do. So CAD JPY, about to go to the alerts. Look, see? The alert got triggered, so it'll show you that, right? So my entry is 91450. And all I put is, I literally just put sell limit active. And I'm gonna tell you guys why this is important. If you do buy limits or sell limits, I usually don't have this issue, because like I said, my entries are usually a little more aggressive than some other people. So, but if you're the person, that has, super tight stop losses, and you've had trades that hit your entry, but they don't put you in a trade, that's why you want to have the alert there. So if you get the alert as soon as your entry is hit, to immediately go look at your MetaTrader 4 and see if it puts you in a trade. So say for instance, you get the alert, it says sell limit active, but you go to MetaTrader 4 and it hasn't put you in a trade yet. Then obviously you want to know what you would do. Just go ahead and execute by market. That way you don't have to worry about missing out on the trade. So that's the concept of why you want to use it, because you'll be mad if you wake up the next day, you saw it hit your entry, but you go to MetaTrader 4 and that joint still say sell limit. You're like, what the hell? So that's why you want to set the alert, okay? Exactly. There you go. So so that's what I do. So I put the alert for when a buy limit or sell limit activates, and this is how I do it. So I set this alert, assuming that the trade activates, then I'm going to set an alert for take profit 1. And that's basically all I do. So I wait for this to activate, then I'll go set, because what I don't want to happen is this drop and then I get an alert say take profit 1 got hit. That's just going to like throw me off, because I'm not going to know what's going on. So I rather get the alert that the trade is active first. Once I get that alert, then I'm going to immediately set an alert for take profit 1. Once take profit 1 gets hit, then I'm going to set an alert for take profit 2. So I walk it down. I don't just like set all 4 take profits, because like I said, they're probably not all going to get hit. So I basically set 1 take profit and wait to set the next one whenever 1 gets hit. So when TP1 gets hit, then I'll set TP2. When TP2 gets hit, then I'll set TP3, so on and so forth. So that's basically how I play it. But yeah, so on top of that, for anybody that's new on the call, once again, because your boy got a YouTube video for everything, I got a YouTube. Oh, it's actually in my Telegram chat. So look, if you guys are in my Telegram, I'm lazy right now. Here it is right here. Look at that beautiful smile. So I actually have a YouTube video right here showing you guys how to be able to set alerts properly, because I wasn't really trying to show you. I was just kind of moving fast. So If you guys want to know how to be able to properly set an alert, go tap into my YouTube video. I dropped that in the chat. And yeah, guys. So with that being said, I appreciate everybody for being on the call. Shout out to my boy Wall Street Ray, big chairman on the charts and in the back office, staying up to be able to get onto the call. And then you guys know, I'll see you guys next week. Can't say I'll see you tomorrow because the market is going to be closed tomorrow. So I'll see you guys next week, Monday, early Monday morning, late Sunday night, however you look at it. And you know, don't do anything I wouldn't do. Make sure you manage your trades accordingly, and you know, just look out to see if I ended up sending out AUD USD or USD Cad, you know, assuming that y'all stay up. If not, then obviously make sure you go ahead and put in Cad JPY. Worst case scenario, y'all wake up tomorrow. Because like I said, this looks like, I'll be real, this looks like it's just gonna keep dropping. And USD Cad looks like it's just gonna keep going up. So to be real, that's why I said I personally wouldn't even waste my time putting in either one of these trades because you're probably just gonna delete them anyway. Just focus on the trade that I officially sent out, Cad JPY, right? So with that being said, love you guys. Appreciate you guys. This video will be uploaded on my YouTube channel later on today. Don't do anything I would do, and peace out.